Time for a market update, and it's a blue Monday today, or a very red Monday, as you can see across the board. Markets around the world have fallen today on the prospect of a Russian attack on Ukraine. So NATO is saying it's putting forces on standby in response to Russia's military buildup at the border of Ukraine, and that is being seen by investors as yet another sign that the West is bracing for a move, even though Moscow is still denying any plans to actually invade Ukraine. Now, markets were already falling last week, and that was on expectations that the central bank in America, the Fed Reserve, will raise interest rates. So let's look at the screen and see how this is all playing out at the moment. You can see here the S&P in America, the big market there, down by 2.69 at the moment. The tech-heavy NASDAQ also down similarly, opening in the red. And of course, those US markets open shortly before our own market, the JSE, closes. The S&P down by more than 2.5%, and that follows its worst weekly drop since March 2020 last week. In Europe, let's look at the FTSE, down by 2.7%. That's in Paris, and the DAX in Germany, rather, down by more than 4%. So both heavy falling in Europe, and the JSE are not spared today, down by 3.5%, which is significant. Now, generally, when markets are this weak, buyers often move in, but given the risks in the world at the moment, investors finding that is not exactly the situation. All the so-called riskier assets down. Bitcoin, by the way, down to its lowest level in 6 months today. So what's trading up? Well, generally the dollar. That often means weaker rand. Right now, the South African rand 15.25 to the dollar, and also oil buoyed, and we expect that trend to continue. So Bongiwe, we'll see how this all plays out this week, but right now we're seeing Ukraine and those fears and those geopolitical tensions having a real impact on the market today.